Hello and welcome to this video on personal finance. In this video, we will cover the basics of personal finance, including budgeting, saving, investing, and managing debt. Whether you are just starting out in your career or looking to improve your financial situation, understanding these concepts is essential. The first step in managing your personal finances is creating a budget. A budget is simply a plan for how you will spend your money each month. To create a budget, start by listing all of your income sources, such as your salary or any side hustles. Next, list all of your expenses, including fixed expenses like rent or car payments, and variable expenses like groceries and entertainment. Once you have your income and expenses listed, subtract your expenses from your income to determine your net income. This number represents the amount of money you have left over each month after paying your bills. If your net income is negative, you will need to find ways to cut expenses or increase your income to balance your budget. To further optimize your budget, consider implementing the envelope budgeting system. This system involves dividing your expenses into categories and placing cash into envelopes for each category. This helps you visually see how much you have left to spend in each category and prevents overspending. Additionally, it's important to review your budget regularly and make adjustments as necessary. Life events such as a new job or unexpected expenses can impact your budget, so it's important to be flexible and adapt accordingly. Once you have a budget in place, the next step is to start saving money. Saving is important because it allows you to build an emergency fund, save for a down payment on a house or car, or invest for retirement. One popular method for saving is the 50/30/20 rule. Under this rule, you should allocate 50% of your net income to your needs, 30% to your wants, and 20% to savings and debt repayment. Needs include things like housing, utilities, and transportation, while wants include things like dining out or entertainment. By following this rule, you can ensure that you are living within your means while also saving for the future. To further optimize your savings, consider automating your savings. This involves setting up automatic transfers from your checking account to a savings account or investment account each month. By doing so, you can ensure that you are consistently saving money and not relying on willpower to save. Another saving strategy is to take advantage of employer-sponsored retirement plans, such as a 401k or 403b. These plans offer tax advantages and often include a company match, which is essentially free money. Once you have built up an emergency fund and saved for short-term goals, the next step is to start investing. Investing involves putting your money to work in order to earn a return. There are many different types of investments, including stocks, bonds, and real estate. When investing, it is important to remember that there is always risk involved. The stock market, for example, can be volatile and unpredictable. However, over the long term, investing has historically provided higher returns than simply leaving your money in a savings account. One popular way to invest is through a retirement account, such as a 401k or IRA. These accounts offer tax advantages and can help you save for retirement. If you're just starting out with investing, consider investing in low-cost index funds, which offer broad diversification and low fees. Another strategy is to invest in individual stocks, although this is generally riskier than investing in index funds. If you do choose to invest in individual stocks, it's important to do your research and only invest in companies that you believe have strong financials and growth potential. Another important aspect of personal finance is managing debt. It's important to avoid high-interest debt, such as credit card debt, as much as possible. If you do have high-interest debt, focus on paying it off as quickly as possible. One strategy is to prioritize paying off the debt with the highest interest rate first. In addition, it's important to build an emergency fund. This is a savings account that you can use to cover unexpected expenses, such as medical bills or car repairs. Aim to save at least 3 to 6 months' worth of living expenses in your emergency fund. Retirement planning is also a crucial aspect of personal finance. It's important to start saving for retirement as early as possible to take advantage of compounding interest. One popular retirement savings vehicle is the 401k plan, which allows you to save for retirement on a tax-deferred basis. Finally, it's important to create and stick to a budget. A budget can help you track your expenses and make sure you're living within your means. Start by tracking your income and expenses, and identify areas where you can cut back on spending. Then, create a realistic budget and stick to it as closely as possible. In conclusion, personal finance is a crucial aspect of our lives, and it's important to educate ourselves and make informed decisions about our money. By investing in low-cost index funds, managing debt, building an emergency fund, planning for retirement, and creating a budget, we can take control of our finances and work towards achieving our financial goals.